Will it make a new high? I think it will, because quite frankly, I think we are in a new parabolic advance because Bitcoin tends to follow the rules of parabolic equation when it has these advances. And so we go up in a parabolic curve, which is basically an ever increasing advance. Parabolic advances mean they advance at an increasingly greater rate. And so early in a bull market, the pace of gain is less than it is later in a bull market.
This content is brought to you by VeChain, which is a leading enterprise-grade Layer 1 public blockchain spearheading a digital revolution from a sustainable, highly scalable smart contract platform. The VeChain blockchain has many unique features, which makes it an ideal choice for Web3 applications. VeChain is working with many great enterprises such as PwC, Givenchy, BMW, and Walmart China. Most recently, they partnered with the Boston Consulting Group to build a revolutionary decentralized application ecosystem. I'm a big believer in this project. I have been since 2018. I've been a VET token holder for years. And this blockchain is highly scalable, great with security and speed, and it has low energy consumption. If you'd like to learn more about VeChain, please visit vchain.org. Link will be in the description. Welcome to the Thinking Crypto podcast. I'm your host, Tony Edward, and with me today is Peter Brandt, legendary trader, author, and the founder and CEO of Factor Trading. Peter, great to have you on the podcast.
Hey, it's great to be on with you, Tony, and we both got the memo about black, so that's good.
Absolutely, Peter. I'm ecstatic to be speaking with you. I've been following you for a long time. I appreciate your knowledge in the markets, and yeah, it's amazing to have someone like you on. So it's an honor, and thank you so much for taking the time.
Oh no, I really enjoy it, Tony. Every chance I get, really, to kind of share whatever knowledge people I have that people might find useful. I like to share it because I've kind of learned by my mistakes. Trading is all about making mistakes and trying to learn, and if I can share things about mistakes I made that might keep other people from making the same mistakes, I'm all for that. And I know that certainly early in my career, there's some guys that were in Chicago at the Board of Trade that really were very selfless with me and sharing with me. And so I kind of look at it as my opportunity to say thank you to them, even though they're not around anymore, but at least the appreciation of getting wisdom from people that have come before us is always important to do.
I love that. So Peter, tell us about where are you from? Where did you grow up?
I grew up in Minnesota. I'm a Minnesota guy. I grew up, spent my first, I think, 22 years in Minnesota. I grew up in Minneapolis, actually, in the city of Minneapolis, although I spent a heck of a lot of time up in kind of the boundary waters or the lake area that's kind of wilderness in Minnesota is where I'd spend my summers. But that's where I grew up. I went to, I started out of high school. I was an ice hockey player.
Wow.
And I played ice hockey for a team that actually last year was number 2 in the country in the national championship. St. Cloud State University. It's a Division I hockey program, but then decided in my junior year it was more of a party school than it was a real school, and I probably needed to get an education in something that there actually were jobs for. So I transferred to the University of Minnesota and got my degree in business marketing, advertising type stuff at the University of Minnesota. And from there, and this was back in the days when jobs were plentiful, unlike today, where these young people have to be real selective in what they're going to graduate in because in some fields, becoming a Starbucks barista is kind of the education track they're on, unless they have some real skills or they're really grinders and can create jobs for themselves. But so there are plenty of jobs back then, and I was hired by, at the time, was third or fourth largest advertising agency in the world,
Mm,
handling major accounts, very, very large accounts. And that was in Chicago, and I was young. By then, I was married. I had a child. We had our kids real young, and so we packed up and we moved to Chicago. And I went to work for this advertising agency and worked on the McDonald's account, worked on Campbell Soup Company account, Kraft Foods accounts. So we had some real big accounts that we worked on. It was a great experience. But then about 3 years into that, I had met a guy in Evanston, is where we lived, in northern suburb just outside of Chicago. And I had met a guy actually through sports programs my kids were in,
mm.
who was a soybean trader. And he invited me to come down and have lunch with him at the Chicago Board of Trade. Come on down, Peter, have lunch. I think maybe you'll get a kick out of what we do down here. And I had never traded a stock. I had never traded anything at that point. I was completely naive about the financial markets. I was aware there were such a thing as financial markets. You hear it on the news that the stock market was doing this or that or another thing, but
Mhm.
really had no knowledge, working knowledge of public markets and how they operated and what they did. And so I'd go down and have lunch with them, and we'd be at the members' dining room on the fifth floor of the Chicago Board of Trade, overlooking with big windows there the trading floor itself. And you look down and you see they're trading silver and gold and soybeans and corn and ice broilers and oats. And it was crazy. I mean, it was pandemonium, it was just pandemonium down there,
Mm.
and you'd sit there for a while and guys would get in fist fights and push and shove and yelling and screaming. And I just kind of go like, seriously, guys do this for a living? I mean, how is that even possible? That guys come down here and they got these old tattered ties because that was the rule. You had to wear a tie, but could have been a bolo tie or an old tie. And traders on the floors were superstitious, and so they were wearing the same tie they were wearing 20 years earlier when they happened to have a good day, and in their trading coats. And I kind of went like, wow, this would be kind of a cool way to make a living. And so I studied up on it a little bit, just what it was about. I go down to the education center at the Board of Trade or Chicago Mercantile Exchange. They would have brochures, or this was you didn't go on the internet to look for this stuff. The
Right.
internet didn't exist. But they had printed brochures, and or books. You'd buy books, and I was captivated by it. And back then, there was no MBA fast track. You didn't get hired out of Harvard or Yale for a large salary because you had an education degree. Everyone started at the bottom. I mean, you started by being an order clerk or an apprentice to somebody or an assistant. But I just felt like sometimes when you're in your 20s and you're a guy, you feel you can't fail at anything, that there's nothing you can do, you can't get hurt. It was pretty irresponsible of me, frankly. I didn't have a lot of money in the bank, and I had a wife and two kids.
Mm.
I had a rent to pay, I had food to grow, to buy, but I found a grain company, Continental Grain Company. They're not around anymore. At the time, they were the second largest grain company in the world, next to Cargill, which is the largest. And they offered me a 6 month deal to bring in business. Here you can learn the business, but you got to bring in business. Everyone starts at the bottom. Everybody has to bring in business. You want to be in the business, bring in business. And that's how you learn. And it was lucky that actually brought in as clients Continental Grain, Campbell Soup Company, and
Mhm.
McDonald's,
Wow.
and Homestake Mining, which at the time was the largest gold miner in the United States. And so I was able to bring in business, but then I knew even then, Tony, I wanted to be a trader. I didn't want to be what we defined as a customer's man, handling customers. Because with these customers, I'd get a fraction of a cent for every bushel of corn that they would buy and sell through Continental Grain. And so within a year of doing that, had replaced the income I had given up in the advertising business, and everything beyond that was then gravy at that point. But
Mm.
I knew I wanted to be a trader. That's what I wanted to do. I didn't want to be talking to customers. I wanted to be down there in the pits. I wanted to be yelling and screaming, but you had to learn the business first. And learning how to trade is, and when I say trade, I'm not talking about you come in and you hit Bitcoin and you go to the moon and you cash in and you get a 40x move, or I'm talking about trading as a career. I wanted to make a steady living as a market speculator. And to do that, I needed to learn the markets. Then I needed to learn actually how to trade. And that really was like a 5 year process. And I tell young guys today, yeah, you can come in and you can get lucky uh, with GameStop, or you can get lucky with Bitcoin or Ether. But, that's one round. That's one round to a fight. You still got 14 rounds left. What are you going to do?
Mm.
That market speculation's a marathon, it's not a sprint. And who cares how you did in your last trade? That doesn't mean anything. It doesn't prove anything, other than maybe you're lucky. But how do you make it? And then how do you learn not to give it back?
Right.
Right? I mean, we've seen that in Bitcoin where we have these huge run-ups, and then Bitcoin stalls, and you get alt season, and you have these big run-ups, and then it's like a balloon that expands, and somebody punctures the balloon, and you give it all back. And you got guys today that they go, they get a 10x move, but then they get a 10x loss, and they
Yeah.
end up back where they started. And I didn't want that.
Right.
So I really needed to learn how to trade like the guys who were really good traders traded. And there
Mm.
were plenty. I mean, I worked in the Chicago Board of Trade building where, half the building were professional traders. These were guys that were the best at the best of the best at what they did.
Mm.
And, I blew up accounts. I probably, I'd save up money, and Continental let us trade. They let us trade our own account. No problem with that. Just
Mm.
couldn't front run your customers' orders.
Sure.
So I couldn't, I'm sitting with an order to buy 1 million bushels of wheat. I couldn't buy 10,000 bushels for myself and then stick in the customer order.
Mm.
So, there were rule and regulations about that, but not about trading. All that was required is I had to at least have a $10,000 account. They didn't want me to come in and trade $1,000. I mean, I had to have a $10,000 account to be on deposit and then trade. And I suppose I blew out three or four ten or $20,000 accounts. And that's the price of learning,
Mm.
because you make a mistake and you kind of go, okay, how can I avoid that the next time? Yeah,
Yeah.
and the reality is you usually have to make the same mistake more than once. And
Sure.
uh, I'm 50 years into this since I've made my first futures market trade. And heck, I made a mistake last week. I screwed up a trade big time last week. It happens.
Sure.
Uh, But finally, and I tried trading all kinds of ways. I tried trading on cycles and seasonals. I tried trading on the news, trying to be a fundamentalist, taking a look at the macro situation. And
Mm,
so I tried point and figure charting. I tried a whole number of different ways until I kind of stumbled on a book written in 1948, uh, Technical Analysis of Stock Trends by Robert Edwards and John McGee. And I read the book and it just kind of stuck. I had had enough experience trading to know this kind of makes sense to me. That maybe there's something here for me. And so, that was 1979 when I started looking at charts and what we define as classical chart patterns. And that really the patterns that were originally identified by Edwards and McGee, but even before that, by a guy by the name of Richard Schabacher, who wrote a book in 1933, Technical Analysis and Stock Market Profits. And that was the original book that defined this is a head and shoulders, this is a rectangle, this is a trend line, this is how you draw them, this is an ascending triangle, this is a horn, this is what they mean, and this is what's going on in the markets to create these patterns. They just don't happen haphazardly. They get created for a reason.
right.
And what are those reasons and how do you read those things? And so it was a matter of just finding my way through. I gained a little bit of traction trading chart patterns in 1979, and then 1980 came, and I had really my first really good year.
Mm,
And good not only because I hit some really nice markets, but good because I didn't give it all back.
sure.
I'd catch a move and I'd capture it. And sure, you always give profits back at turns.
Mm,
I don't day trade. I don't believe in day trading. I think day trading is foolish. I hold positions for a couple of weeks to a couple of months. That for me is kind of my sweet spot trading. And it's futures. I trade futures and crypto and forex.
mm,
And so, and it takes a while, and you need to not just know what the chart patterns are, but you need to think through sizing and timing because, there's two components to a trade, direction and timing. And if you get one of those wrong, you're wrong. The trade's wrong. It doesn't matter. Well, I knew this market was going to go from A to B. Big deal. That you can flip a coin for that, but how do you get in, and then how do you size a trade, and how do you manage that trade, and how do you let your profits run, and how do you get out? And getting out of a trade, getting out of a profitable trade is probably the toughest trade to make. I mean,
mm,
for me, getting out of a losing trade, boy, there's no brain. That's a no-brainer
yeah.
for me. It doesn't take much brains for me to get out of a losing trade. But
Um,
getting out of a trade that's a winner and you got a good trade and the market starts stalling and you're not sure is there more money left on the table here? Do I get out? If I get out, will I need to get back in? Or do I go on and look at something else? And, that's just a trial and error. And for me, it was just a matter of making enough trades. And I figure I've probably made somewhere between 35,000 and 40,000 trades in my life
wow.
in futures, crypto. Of course, crypto not going all the way back to the 1970s. I mean, crypto, going back to 2014, 2015. But so you make a trade and you learn. If you're willing to learn, if you're willing to problem solve, you go, I made the trade and that didn't feel very well. I got slapped down pretty good. Well, why did I get slapped down? I mean, And so it's learning through trial and error what your best practices are.
Mm,
So that for me is a matter of best practices. I want to make trades that comply with what I believe to be the best practices in making trades and getting into trades and getting out of trades. And quite frankly, it's easy getting in a trade.
yeah.
Getting in a trade is easy to do. Getting out of a trade is where the bills are paid and the money's made.
So,
Uh,
a question on the trades, and I know this may be a tough question, but on average, what is the ratio of good trades to bad trades? Because look, bad trades will happen,
yeah.
right? Because things happen.
Oh
So,
yeah.
yeah.
Yeah, yeah. I mean, having bad trades, that's part of the process of finding good trades.
Hmm.
I would say to your listeners, if they have an emotional problem with losing trades, they probably ought not trade. They ought to probably put their money in a Schwab money market fund or find a good stock fund or put it into a Bitcoin ETF and forget you own it.
Sure.
Because if you're bothered by losing trades, that's a good red flag not to trade. So it varies, but for the most part, I'm right about half the time. My going in assumption, Tony, is I put on a trade, I assume it's going to be a loser.
Hmm.
That's my mental attitude. Some people go, "Oh, you need to have more hope, Peter. You need to have positive expectations. Feel good about yourself." That's a bunch of bunk. Because I want to start thinking defensively from the minute I get into a trade. So I assume this trade is going to be a loser. And for the most part, it is. Now, in reality, if I go back and I keep really, really good statistics on my trade, I'm obsessed with keeping metrics
Hmm.
about my trading. And so I'm basically right about 54% of the time, wrong about 46% of the time. I'll take a loss on a trade. Uh, but I watch my losses. I will only risk um, about 0.6% of my capital. So I have X amount of dollars that I consider I can employ this. I can buy Bitcoin with it.
Hmm.
I can use it to buy stock. I can use it for margins on a Forex trade. I can use it for margins on trading corn futures, soybean futures. And this is my block of money. This is my pot of money.
Hmm.
And so if I, let's say, have $1.5 million as my pot of money, I'll only risk 0.6% of that on the next trade, I do.
Hmm.
And so, that's basically about $9,000. And
Sure.
so I'll put on a trade, I'll risk $9,000 to start with. Now, my goal when I put on that trade is I want to move to break even on that trade as quickly as I can, hopefully within a week. I really like, even if I can do it in a few days, where I can adjust and I always use protective stops. Now, guys that say don't use protective stops because you're going to get stopped out and then the market's going to go your way. It happens.
Hmm.
Sorry, it happens. I can't tell you the number of times I've been long something and it got stopped out at the low tick of a day. I mean, it's part of trading. Welcome to living. So you have to take accountability. You got to own your trades. You can't blame it on it's manipulation. The whales came in, they tried to dump me. Take ownership.
Yeah.
Because if you tell you to take ownership, you'll never own it.
Hmm.
And so, but I look at it and say, hopefully within the next 3, 4 days, I can adjust my stops and I can move my stops where, I'm not, instead of losing $9,000, maybe I'll only lose 3,000 if it goes against me, or even come to the point where I can move my stops and break even. And, and I remember back the old guys, and I'm talking about when I joined the Board of Trade, the seasoned guys in the pit were World War II veterans. I mean, these were guys that were born in the 1920s
Wow.
that were in their prime. trading in the pits. When I started in the pits, these were late guys in their late 40s, early 50s that had a lot of success in trading. And they would just, you'd ask them, well, what's the secret? And to a man, they'd say, cut your losses short, let your winners run. Now, the devil's in the details of that, Tony, of course, right? I mean, cut your losses short. What does that really mean? Practically, how you do, how do you do that? What's the technique or the principles or the rules by which losses get cut short? And let your profits run. So what does that mean? And so you have to kind of go through a process of self-discovery for what your own mentality is, and what you're able to put up with emotionally, and that's a process that takes time. It's self-education. It takes time to get there.
Mm.
So by 80, I had a good year. 81, I just had a giant year, and in 1981, I gave up all the customer business I had. I sold the customer business to another broker, and put $88,000 into a trading account and incorporated Factor Research and Trading as a clearing member of the Chicago Board of Trade. And no, rest was history, right? 80s were great years, and I look back and I don't take credit that it was my own intelligence that got me there. I just think I had some good tutors. I had some people who invested in me, gave me really wise advice. And I happened to be in the best commodity markets that have ever been in history, and that was in the 1980s. The single best trending markets ever for futures markets. And so you get kind of like the guys that have been in crypto in the last 5, 6 years, right? I mean, they came in to markets that were just absolutely incredibly beautiful. So I was lucky enough to participate in those markets early on in the 1980s, and built up a good size account, and learned to cut my losses short, and I've learned to let my profits run. And so it's been a good run. Like I said, this is the 50th year. This year marks the 50th year since I traded my first futures contract, and that was a futures contract in bags of pre-1965 silver coins that had 90% silver content.
Mm.
And that was the first silver contract, futures contract traded in the US. And so, I kind of pinch myself that I've been able to make a living doing what I'm doing.
Mm.
And it's, I've had some losing years. I think I've had, last time I looked at it, I think through that time I've had, of course, many losing trades. I mean, probably 20,000 losing trades in the process, but I've had 4 losing years. I think they've averaged about maybe down 5%. My worst losing year was actually 2014 was my worst losing year in my trading history, and that was down 14%. But I've had a lot of good winning years. I've had all my performance audited, and I've managed to average a little bit north of 40% a year during that time. And so the markets have been good to me. And then in 2011, I happened to publish a book. John Wiley and Sons wanted me to write a book about trading. I wrote a book in 2011. Did a lot of work. You don't make money writing books, but
Sure.
they wanted me to write a book, and I published it. And part of that, they had me go on Twitter. They set up a Twitter account for me. And prior to then, I was unknown. Prior to 2011, nobody really knew who I was. I had operated for decades as just a private trader, like most of my peers. I mean, most of my peers think I'm crazy for having a social media presence. They, what are you doing, Peter? That's well, why are you doing that? But so I got involved in Twitter primarily to promote the book, and yeah, what a crazy world. I guess you call it X now, but what a social media, what a crazy world that is.
Peter, question on that, because you brought up a great point, and given your plethora of experience, how do you see social media, that dynamic playing out in markets now? Because you see GameStop and AMC, you see meme coins, right, where people are now crowdsourcing and they can have an agenda, they can have pool their capital together. Have you seen anything like that in the history of your time trading?
No, I think, that's new to these small stocks. It can happen in small, and it's new even there. I mean, GameStop and Robinhood. I think the professionals who would be my peers on the stock market side, they were flabbergasted that all these little guys operating from a PC in their mom's basement were able to, you know, take them out of their short positions in some of these stocks, right? I mean, because just the volume and how they ganged up on them.
Mm.
Uh, yeah. So, in the last 10 years, both through things like Robinhood and GameStop, and then Bitcoin, of course, and then the altcoins and all the memes and all of that, it's a brand new world. I feel kind of fortunate because on one end of my career is a bookend, which is the beginning of futures trading, right? I mean, when I started futures, there were not gold futures. U.S.
Oh,
citizens
wow.
could not trade gold futures. They could not trade silver bullion futures. They could not trade foreign exchange futures. They could not trade treasury yield futures, stock index futures. Those weren't around when I started. And so they're at one end, and at the other end, I've got this, bookend, which is cryptos that I've been able to live through this whole period. Now I'm seeing cryptos, which are crazy.
Mm.
So, we've got a lot of new blood that have come into the world of market speculation through, stocks like GameStop and, coming in through Robinhood and, and Nvidia and through the altcoins and Bitcoin and memes and so forth. There's a lot of new players.
Mm.
But my guess is in the end, there'll be a blowout rate that'll be similar to what the blowout rate was in futures traders back in the 1970s, where for every 100 people that came in, there's probably only going to be two or three that'll emerge and say they can make a whole career in market speculation.
Mm. Now, Peter, obviously you've been trading for a long time. You have a wealth of knowledge. What keeps you going, and why do you want to keep trading? How come you're not, somewhere on the beach, retired? I would love to. I'm genuinely curious about that. Why you're still
Yeah.
involved.
Well, for one thing, I love it. I mean, the
Mm.
markets are, in my mind, the ultimate in trying to beat yourself.
Mm.
My competition's not the markets, it's not another trader, it's not the exchanges, it's not the manipulators, uh, it's not some bank that's rigging the silver market. It's not the whales. It's it's self-mastery.
Mm.
How do I overcome the inner demons that try to sabotage me at every turn? The hopes, the greers, the FOMO, the emotions. How do I excel? So, I would say for me at the beginning, it was kind of the excitement of guys yelling and screaming as well as the money they made.
Sure.
I mean, the parking lots at the Board of Trade were filled with Porsches and Mercedes uh, that would drive up the Gold Coast to mansions in Lake Forest and Winnetka. And so it was the money that these guys were making that appealed to me. And we're now it's being really good.
Mm.
I've just found for me that I've been able to break down kind of every aspect of what has to go into the process of trading for myself, from what what charting platforms do I use? How do I most excellently use analysis? What's excellence in analysis look like? What's excellence in order management look like? What's excellent in post-trading performance metrics look like?
Mm.
And so it's for me, it's the challenge of being better this year at what I do than I was last year, believing that if I pursue excellence and I'm obsessed about details, that the money will come out at the end and it just becomes up as a byproduct. It's not my goal. In terms of trading, I've got a lot of physical limitations to me, Tony. I fell off a house in 1984 and
Mm.
spent 41 days in the hospital, had to relearn how to walk, and so my mobility is not great. And so I'm not out on the golf course or walking beaches. For me, if I walk, I need a walker.
Mm.
If I want to walk with my wife, I need an electric cart. And so, I've got limitations that kind of keep me in an office anyway, not in front of a screen. I don't like being glued in front
Sure.
of a screen. I hate screens. I want to turn my screens off during the day. I don't want them on because having them on, I believe, leads me to bad decisions.
Mm.
And so it's what are all of the things that can optimize to the degree possible my ability to succeed as a market speculator? And what are the things that will interfere with my success? For me, one of those things that will interfere with my success is letting my emotions get involved in decision making. And that's exactly what happens when you turn on a screen and you don't like what the hourly chart looks like, so you go to a 5 minute chart, and you don't like what that looks like, so you go to a weekly chart, and you keep looking until you find a trade. Well, I don't want to find a trade. I want trades to find me. I only want to do 2 trades a week. I mean, that's my goal going in, is I want to be able, on average, to put on 2 new trades. Somewhere between 100 and 120 new trades a year is what I want.
Mm.
And so I kind of know what those trades are going to look like on a chart. And, so I'm looking at all the major cryptos. I don't look at altcoins. I think I have no interest in altcoins. I have no interest in memes. I'm interested in 4 or 5 of the crypto coins, mainly only Bitcoin, however. And then the futures markets. I trade global futures, everywhere from the Nikkei Dow and the Osaka Stock Exchange to corn at the Board of Trade to gold at the COMEX to Bitcoin spot. I trade Bitcoin spot.
Mm.
And so, there's probably a list of 40 markets that I look at every weekend, and that's when I do my work.
Which one is your favorite to trade if you were to all time?
It doesn't exist. They phased out the market last year. It was Eurodollar futures, which is
Uh,
basically the interest rate of holding U.S. dollars in Europe,
mm.
similar to the T-bills. It's a T-bill rate, but it's the equivalent of T-bill rates for dollars held out of the country.
Mm.
And that for me was a wonderful market because it trended so well. It was such a good trending market that I liked it. I like grains simply because that's where I got my start. I got my start on the floor trading corn. So I'm from the Midwest. I'm where you can't go anywhere without driving through cornfields. And so I like the grain markets. I like currency markets, and surprisingly enough, I not only like holding Bitcoin, it's the only asset really that I hold, that I buy. And I haven't even looked at the Bitcoin I hold. I don't even pay any attention to it.
Mm.
But also, I'm an active trader in Bitcoin. I will a whole separate pot of money. I like trading Bitcoin. I think Bitcoin is a great charting market.
Sure.
But I would say Bitcoin is probably right up there as one of my favorite markets to move in and out of, but really as a swing trader. So, yeah.
So, Peter, since we're on Bitcoin, would if you wouldn't mind, share your charts, what you're seeing from Bitcoin and your outlook.
Sure. I had heard of Bitcoin, Tony. I mean, but not frequently. Bitcoin wasn't talked about much. I mean, you younger guys knew about Bitcoin. Us older guys, it was just something out there that we'd hear. And what is Bitcoin? Is computer money. And some guy bought a pizza with it somewhere. Some guy bought a pair of shoes with it. Some electronic uh, computer money someone invented. I mean, that's what I thought of.
Mm.
And then there's a pretty active, pretty well known guy. His name is Raoul Paul, is a friend of mine. He lives down in the Caymans. And Raoul sent me a chart of Bitcoin in 2016. And he emailed me a chart and said, Peter, look at this chart and tell me what you think about it. And I opened this chart of Bitcoin and I went, holy crap, this is a beaut. And so I almost immediately called and said, how do I buy that? I didn't know how to buy it. How do you buy a Bitcoin? I had no idea what buying a Bitcoin even meant, Tony.
Right.
I no idea whatsoever. But Bitcoin was, somewhere around $500 plus or minus $50, hanging around in that neighborhood. And Raul set me up with a company that he was using at the time for purchasing Bitcoin. So I didn't, I mean, initially, I think I called my broker and said, can I buy Bitcoin? And buy what? So I bought Bitcoin, and that was in 2016, March or April of 2016.
Mm.
And yeah, so the rest is history. But I take, I'll pull up a couple Bitcoin charts and I'll kind of give you a macro view because what I really want in Bitcoin is I want to have a narrative.
Mm.
And I'm not dogmatic. I don't go like I'm going to go through a few charts and I'll kind of talk
Sure.
through them.
Perfect.
If you have questions, and some of these charts I'm going to show you are kind of the charts I keep for myself. They're not charts I necessarily publish because they're such a disaster. I got so many marks and scribbles on them that they get pretty messy after a while. But at least I have numbers on there that mean something to me, and I'll try to talk through it.
Sure. It looks good.
But I really have I have I like to have narratives in my mind,
Mm.
and then I like to say, okay, this is what I see happening now. I need to see prices support this narrative because
Mm.
I'm not going to let my narrative dictate what I do in the markets. I want the markets to dictate my narrative, not the other way around. And so I try to formulate narratives in my mind that make sense of price, and then I can use then rolling forward. And what we have in Bitcoin, if you go back to Bitcoin and take a look at the history of Bitcoin, you'll see a couple different things. I'll kind of show them on this chart and talk to them. But what you have in Bitcoin is you have these bull markets that are multiple X moves, 20X, 50X, 100X price, these big multiplications of price. And you have these big bull markets in Bitcoin that form parabolic curves. They're governed by parabolic curves, not just parabolic curves, but they're governed by parabolic curves on the log chart.
Mm.
And so in Bitcoin, what you see is we had a parabolic move in 2011 to 13, another parabolic move in to the bull market that topped out then again in 2014.
Mm.
Another parabolic move that topped out in December of 2017. And another parabolic move that topped out, well, some people say it topped out in February, March 2021, though we made a slightly higher high than in November.
Right.
So, but nevertheless, the parabola was broken at the first top. And so what you have in Bitcoin, if you explain to people, what does Bitcoin do? I say Bitcoin as an asset has these bull markets that multiply price many times,
Mm.
many times. When those bull markets are over, you have very prolonged bear markets that correct 80% of the price of the bull markets. And that is the behavior of Bitcoin. Bitcoin behaves that way. It had a 3,191x move, followed by a 94% correction in the 2011 to 2013 bull market.
Mm.
Then I had a 572x move, followed by an 87% correction. Then a 122x move, followed by an 84% correction. Then a 22x move, followed by approximately a 78% correction. So you have Bitcoin that has these huge bull markets that then have massive corrections that correct more than 70% of the price, and corrections that last a long period of time before we see a new all-time high. That we went after the first big parabolic bull market was 21 months before we made a new high. Market went sideways for 21 months. Then we broke another parabolic move, and for 41 months we didn't see a new high. Another parabolic move topping in 2017, 36 months before we saw a new all-time high. And now we have a situation where we broke the bull market back in April 2021.
Mhm.
And when you look at Bitcoin on an inflation adjusted basis, we still haven't taken out that high.
Wow.
And so everybody here recently have talked about this new all-time high in Bitcoin. I don't quite frankly buy it. I mean, sure, by a couple $1,000s, you made a new all-time high. But
Right.
for the most part, we're right where we were in April 2021 and then again in November 2021. Bitcoin has not made a new high now in 38 months.
Mm.
Will it make a new high? I think it will, because quite frankly, I think we are in a new parabolic advance, because Bitcoin tends to follow the rules of parabolic equation when it has these advances. And so we go up in a parabolic curve, which is basically an ever increasing advance. Parabolic advances mean they advance at an increasingly greater rate. And so early in the bull market, the pace of gain is less than it is later in a bull market. But quite frankly, that's where I think we are, that we've had this 38-month period without making a new high. Although, yeah, we made one by a few $1,000, but I'm not counting it that way.
Sure.
But that we have this parabolic advance that I believe will go forward. Now, where will it go from here? And I'm going to show you another chart which kind of lays out the rest of the narrative of the current bull cycle that we're in, because I believe that's what we're in. We're in a bull market cycle that will continue. And it started at the November 2022 low. And so we are now, 5, 6, 7, 19 months from the low. Now, halving is a big deal in Bitcoin. Everyone talks about halving in Bitcoin. Let me just show you one other thing for why I think, and I'll come back to this, the correction that we're seeing in Bitcoin right now is a correction that I've seen over and over and over again.
Hmm.
It just seems to be a correction that we have all of the time in Bitcoin. Sorry, I have to kind of play with this chart to get it
Oh, no
the
worries.
way I want to. But it's this pattern in Bitcoin where you get a high and then you just chop.
Hmm.
You get people FOMOing on a new high and then you dump them out. You correct, you bait people in, you get people to FOMO, then you dump them out. You get weak lows, which is really kind of where we are. It's what I refer to on Twitter as kind of the hump, slump, bump, dump, pump. And that's exactly what we have. We had the pump, the hump, the slumps, the bump, and then we had the dump. Now we think we do the pump. And this is, very, very characteristic. And if you go back in the previous bull cycles in Bitcoin, Tony, like the bull market cycle that we had in 2016, you'll see this pattern over and over and over again. It just reoccurs.
Sure. So it looks like
Now,
your next target up is around 80 something thousand.
yeah, I think so. But no, I want to show you something that happens at halving. There's a couple other people that have written about it. For the most part, it's something that I have followed. But if you take a look at halving, where we are in halving, and you take a look at where halving is in bull market cycles, something absolutely amazing takes place. Now, whether it continues or not, I'm not sure. But
Hmm.
you have to assume that it probably does. At least you have to pin your initial hopes on that. That halving takes place at exactly the halfway point between the low that started the bull market and the eventual bull market high.
Oh
Is
yeah.
if you take that bull cycle and look at the halving took place exactly halfway. You had 75 bars before the halving, 75 bars to the high after the halving. Then we had the bull market that topped out in October, November of 21, where from the low to the halving was exactly halfway, 74 bars to the halving, 75 bars to the top.
Wow.
And if you look at where we are right now at the halving from the low point that we had back in November of 2022 and the halving, that suggests to me that that is going to be the halfway point. We're just in a halving process pause, which we've had before. With the market's drifted sideways at the halving point in the past, and that we have a top that comes into Bitcoin. It was 73 bars into the halving. Now would be 73 to 75 bars after the halving. We should top out in the middle of September. Now, where do we top out? Well, I just look and take a look at the parabolic curve and say we are going to top out based on the parabola. And so I just think, okay, we're going to be somewhere in the 125 to 150 area
Hmm.
relative to the parabola, 74 bars, weekly bars after the halving point. So that kind of becomes my master narrative.
Sure.
Now I'm looking at that narrative and it's driving me. Now there's another narrative that I'm looking at that really contradicts this. And so I am not the kind of trader that says I'm going to make up my mind once and no one's ever going to convince me I'm wrong. I mean, I want to have a reason to believe what I want to believe, but I also want to know what do guys on the other side of my trade believe?
Sure.
I mean, I got to believe that there's some really, really smart people that are not thinking like me, that think something's going to happen quite different. And these aren't idiots. They're smart guys,
Hmm.
and they're not willing to place their bet the way I do. And there's something in Bitcoin that really has kind of begun to bother me. And let me show you what that is. And what I call it is exponential decay. The
Hmm.
Bitcoin market has been subject to exponential decay, meaning that each successive major bull cycle in Bitcoin has been substantially decayed in robustness from the previous bull market cycle. That if you go back to the bull market cycle that ended in 2011, we had approximately a 3,000x move, correct?
Hmm.
Now, the next bull market cycle lost 80% of its power because 80% of the 3,000x move gave us approximately a 570x move. So we had an 80% exponential decay in the energy of the bull market that ended in December of 2013 compared to the previous cycle. Same thing happened with the bull market into the 2017 high. It was a 122x move. Again, approximately an 80% decay, exponential decay relative to the previous cycle. And lo and behold, in the bull market cycle that broke the parabola finally in 2021 at a 22x move, represented an 80% decay in the energy of the market. Now, if you take that same decay and you say that it is not this halving that is going to be the narrative that'll carry the day, that the halving takes place at the halfway point, and that the parabola continues from the halfway point to the end of the cycle, but instead you adopt the narrative of exponential decay, market's already topped.
Oh, wow.
That you take an 80% decay of the last bull market gives us basically somewhere between a 5 and 6x advance from the low we had at approximately $15,000
Hmm.
back down here in November 22 is really what an exponentially decayed bull market would look like in Bitcoin. And that would bring prices up into that 70 to 72,000 level. We've seen that. And
Mm.
so somebody's a liar here. This is kind of like two people saying, I'm telling you the truth, and somebody else is saying, I'm telling you the truth. And the halving theory, the halving narrative has raised its hand and said, Tony, believe me, I'm the truth sayer. We're halfway through the bull market. We've got a big bull yet to come. We still have 54 weekly bars till the end. But then you have exponential decay raise his hand and say, no, it's really not that way. There's a whole different way to look at it. And that way is that we've already topped and
Sure.
we'll now see a bull trend. And then there are some ways that you can actually look at that, find it.
So yeah, Peter, I absolutely appreciate that you're giving both scenarios because sometimes many investors only look at one scenario, but you have to look at all because you never know what could play out. And like you said, there's diminishing returns here. Each cycle, the data doesn't lie. So the possibility of a top already being in there is there. It's just it's about probabilities, which one is likely to play out, right?
Right. And so what I want to look at is the shorter term price. You know, is there a hint? Can I get a clue from other charts? Can I get a clue from weekly charts? Can I get a clue from Bollinger Bands? Can I get a clue from other things that'll tell me, aha, the market is showing its hand? Where's the tell? It's like playing poker. I'm trying to figure out the tell of my opponents, the opponents being the market itself. I'm trying
Mm.
to figure out what the market's telling me. Because now, if you look at this, where we have the entire bull history of Bitcoin as a parabolic curve on a log scale, but you also have an upper parabolic curve, which tends to suggest exponential decay, which tells me that, hey, I believe in the Bitcoin story. I buy it. I buy the story that fiat currencies are doomed, that Bitcoin has a chance to emerge here as an important store of value, that it has a great story to be told. If you look at all the characteristics of Bitcoin, it has a great story to be told, why it can emerge as a L1 store of value in the global financial scheme of things, right?
Mhm.
So, but if you look at this tends to support the concept of exponential decay in that we're topping out against the upper parabolic curve, which tells me If truly Bitcoin's going to 1 million, like some people say, Bitcoin's $1 million, 2 million, you name your price. Who cares? Who cares what it is? You're going to blow out through the top of this upper red parabolic curve. And that is how I will know that Bitcoin's going to 1 million.
Ah, that's interesting. So Peter, do you think, and this is where like you, I'm trying to figure out as a Bitcoin holder and investor, are those narratives that going to a million legit? Because it would take something incredible, right? Maybe ETFs, maybe central banks holding Bitcoin where it breaks out of this parabolic curve. Would it take a catalyst like that?
Yeah, I mean, I don't know. I mean, basically, the US dollar is the number one L1 layer of store of value in the global economic scheme of things, right? I mean,
Mhm.
it's the major global reserve currency.
Right.
And so what happens where the US dollar gains such disrepute that there's a whole new currency scheme that somehow gets created?
Mm.
Then all of a sudden, the price of oil, the price of real estate, the price of gold, the price of hard assets gets expressed as a bushel basket, which is 20% the price of crude oil, 20% the price of gold, 20% the value of the dollar, 20% the value of Bitcoin, 10% the euro currency, whatever it is. Figure it out, make it up.
Mm.
Is that Bitcoin gets included in a master currency basket that really represents going forward the new world order.
Mm.
uh, or at least an important player.
Sure.
It gets wider acceptance as a place. Now, most Americans, their store of value, whether they admit it or not, is US dollars, because when they liquidate an asset, they return to dollars. It's
Right.
it's their return. It's their home base, right? Their
Yeah.
home store value is the US dollars. They sell a stock, it goes back into US dollars. They cash out on a treasury bill, it goes back into US dollars. Um, and I think you're in a generation where people are now starting to think, I don't want to really be holding US dollars. I'm more comfortable with anything that's not employed in the stock market or a venture capital deal or a private equity deal or a stock I'm in love with, like NVIDIA or Apple Computers or Robinhood counts, or an apartment building that they're trying to buy to own rental real estate, that they return to Bitcoin,
Mhm.
and that Bitcoin is forced its way. I mean, think of it this way: I lived through the 1980s, uh, it- which your audience probably isn't going to relate to, but it was a period in corporate America where we had hostile takeovers,
Mm.
where a group of investors felt like a company was undervalued. You had a big company that was selling at a share price that was less than the sum of its parts, that you could buy a corporation and break it up. You could break it up into its individual parts and sell it off, own it for a year, and make 30 to 40%, because these corporations back in the early 1980s, most of the Dow Jones and a large portion of the S&P corporations were selling at a share price that was less than the book value per share. They were cheap relative to the sum of their parts. So you had hostile takeovers. The board of directors and the management of these companies weren't pleased. They were being bought out by these hostile people. These hostile people demanded a seat on the board of directors. They demanded changes. That they were trying to take over these corporations so they could break them up and sell off some of their parts. They were being opposed by the management of the company. That, in effect, is kind of what we have. Bitcoin is a hostile takeover of
Mm.
the economic fiat system. And it's not well accepted by the people in the boardroom and in government. And
Right.
that's why it's a hostile takeover, because it's an attempt to redefine what a currency is that is not wished for by central banks and governments. And so it's being forced upon them, and it's being forced upon them, and they're fighting against it. In the end, they're going to lose the fight, I think. So,
great perspective there. And, we'll have to see what the future holds. But I'm like you, I'm fascinated to see what will be the catalyst to drive Bitcoin outside this parabolic curve, or it just stays within it and it's not $1 million by 2030, right? It's just maybe a narrative out there that people are using.
yeah, yeah. Or, we're going to enter the world of quantum computing, and you put quantum computing together with artificial intelligence, and 15 years ago, people wouldn't have imagined that we could have this thing called Bitcoin.
Mm.
Bitcoin was created by the world of computers. Who knows? Is Bitcoin the highest form of intellectual attainment that we can make in the monetary system? I don't know if I want to make that bet.
Sure.
That I'm going to bet against the creativity and imagination of humanity, of very smart people who want to employ AI and quantum computing to come up with something even better.
Mm.
And so, who knows? Who knows what the Bitcoin of the year 2035 is going to be?
Right.
But I'm going to allow for the fact that it may be something that I don't know about right now. I'm not going to be alive for it, so I'm not worried.
Now I know you trade Ethereum as well. Would you be able to show us if you have any charts for ETH?
Yeah, I do, and I'm kind of an ETH hater. I get a lot of grief on social media for not being an enthusiastic ETH person, but I'm not. And I'm not because I've dealt with ETH. You need ETH to get involved in some of the other things that the internet has to do. It's a cumbersome thing. I think ETH is, in the first place, I think they claim it's decentralized. No, that's a bunch of bunk. It's not. I mean, Bitcoin is, if you take all of the viable decentralized crypto coins, Bitcoin has like 95% share of the market. It is the decentralized coin. And I personally think that the future can belong to decentralized crypto. And while ETH makes the claim it is, it seems like ETH is always saying, well, if you don't like ETH, they're coming out with another version. I mean, whenever you got to come out with another version of things, hey, you're admitting that what you had before is broken. And so that's the story of ETH. Well, wait for ETH version 2, wait for ETH version 3. The best is yet to come. Well, that's a pretty pathetic story. So I like ETH because whenever I want to defend my Bitcoin position, I look to sell it. I want to short it. I do not short spot crypto. I only will short futures contracts. And so I will look to ETH when I'm a little bit nervous. I don't like to take short-term capital gains. I want all my Bitcoin transactions, if possible, to be long-term capital gains.
Right.
And so if I'm close to a long-term capital gain treatment on a Bitcoin purchase, I don't want to, 11 months into the ownership, sell it and take a short-term capital gain on it. I want long-term capital gains. So there have been occasions when I've shorted ETH futures against my Bitcoin as kind of a hedge of protection. I'm not an enthusiastic ETH user. I think there's going to be a lot of disasters come up. We've seen a lot of big bankruptcies already in the crypto world. It's been a history of them. The crypto world has been a history of fraud. It's been a history of bankruptcies. It's been a history of big failures. And when there's failures, they seem to be big failures. I think this whole staking thing is going to be a disaster. There's going to be horror stories that'll come out. and it'll come out of the whole staking endeavors that are going on right now. In the first place, I don't think the U.S. government's going to allow staking forever because
Mm.
it's really competition. The government's going to say you're earning interest on an asset. Now, it's not U.S. dollars. You're not buying treasury bills. You're not buying a CD issued by a local savings and loan. You are buying an interest-bearing instrument. And interest-bearing instruments need to be governed by the Federal Reserve Bank and the Treasury. And so just as the SEC has attacked some of these cryptos as being securities and not yeah, not cryptocurrencies like Bitcoin are. I think we've got a world ahead of us where we're going to have a lot of failures and disasters that will be linked to the whole Web 2, Web 3 staking world. So I would advise people know where your money is. It's like, hey, it's 8 o'clock. Know where your kids are, right? I
Yeah,
mean, hey, it's 2024. Know where your money is. So,
for sure. Peter, I know I kept you over time. I got some wrap-up questions here for you. First, yeah, well, I should say it's rapid fire questions. First is favorite food.
I got to go with pizza. Yeah, got to go with pizza.
And favorite musician or band.
Um, I that's hard for me because I like all kinds of music. When I go to my radio stations and do shuffle, I never know what's going to come up. U2 or some new band. It's I've got quirky tastes in music.
Favorite movie.
Favorite movie? Wow. Gonna pass on that one. Not a big movie. Not a big movie watcher.
How about favorite book?
Bible.
And when you're not doing any trading and things along those lines, what are you doing for fun?
I bike ride and I can bike ride because I can't walk. It's hard for me to walk, but when I'm on my bike, my posture is leaned forward and I can hold the weight of my torso with my handlebars. So I bike a lot. I do 2, 3 hour bike rides. I'll bike 30, 40 miles when I go biking. So that for me is the exercise. And I do play some racket sports only because, again, if you're playing racket sports, the correct body posture in playing racket sports is you're bent at the waist, which is how I walk. I'm one of those old guys that you see at the mall that you say, look at that poor old hunchback man over there walking. I mean, that's me. That could have been me. So those are things I can do.
Peter,
And swim. I
you
swim
swim.
too.
Oh, that's good. And then at least you're in an area where you have good weather and yeah, I'm sure you probably have a pool or something like that.
Well, we have a pool here. In the summer, though, we get out of the heat. It gets, 115 degrees in the daytime, it's a little hot. And
Hmm.
so we, 3, 4 months a year, we'll go to Minnesota and we have a lake place in Minnesota. So we'll go up and spend the summer at the lake and boat and uh, go out to restaurants and so forth. So we get out of that. We get out of the Arizona heat in the summertime.
Peter, that's awesome and absolute pleasure chatting with you. I appreciate all of your knowledge and insights, and I wish I had a few more hours to talk to you about markets.
Well, it was good talking to you, Tony. Very good. Thanks. You're a great host and a great interviewer, and I've appreciated speaking with you.
Likewise, thank you so much, Peter.
Bye bye.